Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. This week's chart is Sinobiopharma Inc, ticker symbol SNBP, a China-based manufacturer and distributor of biopharmaceutical products within the healthcare sector. Sinobiopharma was a promotional play. As noted on our site, penny stocks are generally not covered by analysts or large investment firms. Because of this, companies that reside in this market typically gain exposure and public interest in their stock by investing in large-scale promotional campaigns. I'm sure you've received numerous promotional campaigns like this in the mail from time to time, or received email from websites that specialize in this. An interesting thing happens when these campaigns are released. The next time you receive such a promotional campaign, take the time and look up the stock. You'll probably notice that the stock had moved significantly prior to the time you physically received the ad or the email. Why? Because those that paid often great sums of money for monthly subscriptions to those companies that produce and promote the actual campaign get a heads up before these ad campaigns are released and take position early on. In the early phase of the promotional move, more and more people take position, moving the stock price higher. By the time the mass of the general public, you, receive the ad, the stock price has already made the bulk of its move, and all too often, when the general public, you, take position, it's too late. The best way to invest in penny stocks, therefore, is to buy them before they are heavily promoted and hyped up in price. That's where the trick is, knowing which stocks are in the early phase of promotion by those companies that have a big enough membership to make a stock move on their recommendation. We know of such companies, and when they make announcements, we quickly put them on our watch list for our members for potential breakout plays. One of our favorite companies made an announcement on Sinobiopharma Inc. on November 15th, and we promptly noted it on our site for Monday's trade. As expected, volume came into the stock at the opening, causing the stock to gap higher. We generally do not buy opening upside gaps, but instead wait until the froth of the dumb money has subsided so we can get a clear picture of the true direction of the stock's price movement. As a rule, we generally wait through the initial 15 to 30 minutes of trading to see if the masses are actually buying into a sell-off. If the gap is not closed, we look for a volume break of the high created in the first 20 minutes of trade. This is exactly what happened here, and where we took our initial position. As noted in our manual, How Professionals Trade the Penny Stock Market, once in a position, our attention quickly turns to exit strategies. Professional traders look to find convergence of key pivot points amongst chart patterns, not only within a single time frame, but among multiple time frames, as they know it is where the greatest number of traders are watching an individual stock, all ready to take or exit a position should the respective key pivot point be breached or turned away on significant volume. Thus, as the stock moves into these key pivot points, we closely watch the price volume action, letting it, not we, project onto the market, dictate our course of trading action. To that end, on the monthly period chart, we saw a key pivot point at the 0.40 price level, as we had convergence between a strong price level resistance and the oppressive overhead 50-period moving average. The weekly period chart demonstrated a convergence amongst the overhead and significant 40 and 200-period moving averages in the 0.40 to 0.45 price level. Using a line chart on the close, we saw another key pivot point of the weekly chart in the form of a strong downtrend line at the 0.26 price level. A good sign was noted on the daily chart, as the key pivot point of a strong downtrend line was broken on significant volume, which generally implies continuation to the next major key resistance level. To the upside on the daily chart, we saw price resistance levels at the 0.22, 0.30, and 0.45 levels respectively, with the 0.45 price level of greater significance because it represented convergence between a price level resistance and the descending and powerful 200-period moving average. As a general rule, we look to the support of the intraday 200-period moving average with a 3-minute period as our moving stop-loss point, provided the following criteria is met. If it is broken on significant volume, if it is broken by 2 successive candles that close beneath it, or an opening gap down exceeds 51% of a breakout range expansion candle, and does not raise above the 200 period moving intraday period moving average within the first 30 minutes of trading. SNBP did not violate our rule, as it moved back into the support of the intraday 200 period moving average, and as volume came to the upside, we increased our position. Looking at the intraday, we saw this form a bull flag consolidation with a price projection target at the 0.33 price level. As noted in our manual, a consolidation forms when a stock's price movements trades within a range between two established boundaries, be they trend lines, price points, or etc., after a directional movement in the stock's price, whether it be a previous advance or a breakdown. Consolidations visually take on the appearance of either a pennant, which looks like a triangle, or a flag which resembles a square or a rectangle and can form within any time frame. The slope of the triangle or flag can be level or have an upward or downward appearance. As a general rule, downward sloping flags and upward sloping pennants are considered bullish, while upward sloping flags and downward sloping pennants are considered bearish. Flat or level flags and pennants are generally considered bullish or bearish depending on the trend that immediately precedes their formation, and therefore are considered continuation patterns. The development of a pattern over in the time in which it develops tends to project into the future its target. In the case of a consolidation pattern, if one takes the range between the low and the high of the previous breakout and adds the range to the low of the pullback of the consolidation, the high that is projected predicts the next future target and a good place to consider taking profits. Thus, on the intraday chart, the 0.33 price level represents a key pivot point to consider taking action depending on the price volume action at that time. Drawing an uptrend line against lows formed on the intraday chart and projecting a similar line across the high formed an up channel with the upper border at the 0.30 price level at the open. SNBP gapped open and above this upper trend line and into the price target we had projected from the consolidation pattern, and where we took partial profits on opening trade on the 17th. Being that the stock was extended far above the support of the intraday 200 period moving average, we used the upper boundary of the up channel as our stop loss. The stock traded above the gap high, and we quickly drew a trend line using the most recent highs. We also drew another up channel of similar range as the previous one drawn, and immediately started selling off the remainder of our position, which we had exited at the 0.38 price level. Our rationale was that we saw the stock was nearing a key pivot point at the 0.40 price level, as seen on the monthly, weekly, daily, and intraday charts. The stock was far extended above the most significant moving averages used by traders, the 8 and the 20 period moving average on the daily chart, and the 200 period moving average on the intraday chart. And most significant was the formation of a volume climax seen on the daily chart. Please refer to our manual if you have any questions on the volume climax. To those who still held a position, and we hope you weren't one of them, you can see the formation of a perfect storm as a reason why you should have sold your shares. Look at the convergence that took place when volume came to the downside as the stock broke the intraday support of the 200 period moving average, a strong uptrend line, and the neck of an intraday head and shoulder pattern simultaneously. What lies ahead for Sinobiopharma is unknown. Only time and the price volume action at key pivot points will tell. Until next week from TradingPennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.